Well, I think it is a worst case scenario and is a threat to the market just to think twice about doing something. But I think personally it won't happen, because before we reach that kind of level, then we will see demand destruction kick in on a large scale. We are probably starting to see that already around the world with oil, even at these prices around $120. But Karen, anything can happen. Just look at what happened to natural gas in Europe yesterday. We briefly touched the price that in oil barrels equivalent was $630. And this morning we've seen nickel surge past $100,000 a ton. So again, this is the time for the record books, and so anything can obviously happen in the short term. But I think that as we start to move above, if we do move above 150, that will speed up the demand destruction process.
I can ask you about that, because the oil markets have changed over the years since we were last talking about an energy shock as this transition has started to happen. What would demand destruction look like in 2022?
Well, it would be industry curbing demand. It would be consumers thinking twice about taking the car because it's too expensive to fill up. So it will be on a global base, and that's why also every small changes globally would obviously add up to quite a significant amount of barrels, which eventually will lead to some demand destruction and lower demand. So that's the kind of territory we're into now, and we'll just have to see how it plays out.
Ole, nickel has doubled overnight. We've seen record highs on aluminium, I think, and other auto-related metals. Something doesn't add up here. I understand the fear that is driving people to buy commodities at this stage. But some of this looks like, or at least the price action looks like, maybe some big shorts being taken out and a lot of short covering taking place. How careful do you need to be in this market at the moment? Do these price moves, to you, look rational based on fears around supply and demand?
They are absolutely crazy, and it's a very dangerous market right now, because this is market not driven by supply and demand, it's driven by fear. What we're seeing in the nickel, and what we're also seeing in some of the other markets, I think the gas market as well in Europe yesterday, are basically market participants been forward hedging some production or some supplies. They took advantage of the rallying price because they had supplies coming in. Now suddenly a major funnel of supply from Russia has been cut off, especially in the metal space. And that basically leaves these participants holding a naked short, which they just simply need to get out of. And looking at the open interest in nickel as of yesterday, if obviously the open interest is equal measures of long and short, so that the short part of that equation is underwater by $15 billion this morning. So this is just the next phase of this unwinding of global trade that we're seeing right now, and that is basically the margin calls that's going to kick in and going to have we're going to see some pretty serious news, so I think, over the coming days and weeks from major losses being taken in these markets.